Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. Drama jumping from the screen to the boardroom. The future of Warner Brothers Discovery hangs in the balance as Paramount comes out swinging in its effort to acquire the media giant. We're following those latest developments. Plus, it was a choppy day on Wall Street, and investors are playing a waiting game on the Fed as the labor market shows more signs of softness. Bets are rising that a 25 basis point cut is going to happen. We've got a closer look at that market action. And C3 AI among the earnings movers on Wall Street today. A conversation with that company's new CEO is coming right up. Well, the bidding war is in full swing for Warner Brothers Discovery's assets. Tensions rising as Netflix, Paramount, and Comcast submit second-round bids. Business Insider chief correspondent Peter Kafka joining me now to discuss. Peter, it is great to see you. So the drama does continue, Peter. We got a lot of headlines, cross currents. Let's start here. My old colleague, CNBC's Alex Sherman, great reporter that he is, posting on X. He says here, bombshell news in the WBD process. Alex says Paramount lawyers have sent a letter questioning Warner Brothers Discovery sale process. You saw that, Peter. What do you make of that?
That is, I think, a letter that's saber rattling is what we used to call it. That's Paramount saying, we really, really want to do this deal. And if for whatever reason we don't get this deal, if the Warner Brothers board decides they want to sell some of the company to Netflix instead of all of it to us, we're going to go after them. We are either going to make their life difficult in court. We think we have the government on our side on that. Or we're going to go right to shareholders and try to do a hostile takeover. Right now, we're playing by the rules. But you can also read that as a sign of potential weakness, that they feel Netflix may actually have the edge on them right now, and they're trying to dissuade the Warner Brothers board from going with Netflix. So you can look at it as either a sign of strength or a sign of weakness, or maybe both.
Do you think does that delay the sale, Peter? Because you saw, I mean, there was these reports that WBD wanted to pick a winner soon, maybe by next week. I mean, when you see something like that, does that sound still realistic?
I mean, Warner Brothers can make a decision whenever they want. They can also say, we've decided to wait longer. There's no real reason for them to have to do anything one way or the other, except I think they'd all like to go home for the holidays. I would imagine they're going to come out with some decision in the next few days, again, by the end of this month. That doesn't mean the deal will be done, particularly if Paramount doesn't get the deal. I think what they are signaling is, even if you pick someone who isn't us, we are going to continue this process into next year.
Citi, by the way, Peter, they called WBD. They said it was a must-have for Paramount. I guess, one, do you agree with that, Peter? Is it a must-have? And two, so what happens, I guess, if it didn't happen for Paramount?
I mean, what everyone has agreed on for many years is that the winner of the streaming war is Netflix, and that the remaining winners will be some combination of Apple and Amazon and maybe Disney, and then everyone else, including Warner Brothers Discovery and definitely Paramount, are subscale. And the conventional wisdom was there was going to be consolidation among these smaller players, and we were just waiting to see what would happen. When Warner Brothers Discovery was first put together, the company sort of suggested they wanted to be acquirers, but they would also look at being a seller. So similar for Paramount. When Larry and David Ellison bought Paramount, they spent about $8 billion on it. They suggested they were going to sort of spend a lot of money bulking it up, but no one thought that would be enough on its own. So however it shakes out, we expect to see more combinations down the road. Now,
David Faber, Peter, another former colleague of mine, a lot of former colleagues being mentioned.
Yeah.
Faber did report this morning, you saw this too. He says Netflix is now the leading bidder for WBD, citing sources, 85% cash bid. What did you make of that, Peter? You know, strategically, does Netflix here, does that make sense?
You have to be careful with a bidding process like this. There's a lot of spin from bankers and would-be sellers and would-be buyers. We won't really know who's winning here. I do think the fact that you've seen several stories about how the White House, the Trump White House, is concerned about Netflix owning part of Warner Bros. Discovery, that would be the movie studio and HBO, that they would have a problem with that, suggests that at a minimum, people are taking Netflix seriously as a bidder. I think you also saw the fact that Wall Street punished Netflix recently as a signal that Wall Street thinks Netflix is a serious bidder. So I would have thought a few weeks ago that Netflix was mostly kicking tires here and wasn't that set on buying part of Warner Bros. Discovery. The company's never done a deal like that. There seemed to be significant tension within leadership about whether they wanted to go forward. At the very least, we can conclude that they do seem to be serious.
So we mentioned Netflix, Peter. We mentioned Paramount. What about Comcast? In your opinion, where are they on all this?
Again, the conventional wisdom is they'll have a hard time getting a deal done because of politics. Comcast itself acknowledged that critique in its last earnings call. They had a very intentional line from management saying, we actually think we can get a deal done, without specifically talking about Warner Bros. Discovery. So they think they have a path clear. A lot of other folks are more skeptical. I'm also just curious about the fact that Comcast, which acquired NBC Universal sort of in the bottoms of the Great Recession, and then has spent a lot of time trying to justify to Wall Street why it owns a media company when it's really a broadband company, and in fact is spinning off a big chunk of its cable TV assets, wants to go and buy another media company, and I remain confused about that.
Final question, Peter. On the regulatory front, what does antitrust risk look like, in your opinion, for these bids?
It's 2025, and so anyone who's giving you a standard explanation, argument about why this is a vertical merger versus a horizontal merger, or what antitrust rules it does or doesn't trigger, I think they're missing the point, at least in the U.S., where right now antitrust rules are decided by whether you're a company Donald Trump likes or doesn't like. And that is why Paramount certainly thinks they are going to win this in the end, because they believe they have a good relationship with Donald Trump. You may dislike me explaining it that way, but that appears to be the way that the world works right now.
Peter, great to see you. Great to have you on the show. Thank you.
Thank you.
Stick around. Much more Ask for a Trend still to come. The Dow, the S&P 500, NASDAQ, and little change as Wall Street's Fed rate cut conviction runs high. Here with the trading day takeaways, we've got Yahoo Finance's Jared Blickery. Jared.
Thank you, Josh. You know, we talk about volatility dropping into the holidays. That is here because we got some holiday chop right on cue, and that's actually a good thing. You don't want to have a bear market erupt in December. That's never fun. So here's the S&P 500 intraday price action. You can see a whole lot of chop right there. Dow, very similar, although it closed on the opposite side of that dotted yellow line, meaning it's negative. But check this out. Russell 2000 up 0.75%. That is also good for a record high. This is the year-to-date chart, and you can see how it's come back and just exceeded the October 27th prior record closing high that we have there. And it's not just the Russell 2000. I found a microcap index in the Yahoo Finance universe, CRSP US Microcap Index. CRSP, I had to look that up. It's Center for Research of Security Prices, and they were just bought by Morningstar. Anyway, that just notched a record high too. So if you're following along here, we had some speculative action into basically unprofitable small cap stocks here because the S&P 600 was down. That's also a small cap index. Here we go. That's the intraday right here. So you put it all together, and not a terribly interesting day in the majors, but there's always things going on underneath the hood here. Let me go. We'll get to Bitcoin in a minute, but just showing you a kind of even split between the green sectors and the red sectors. And that's what we see in the holidays. It's kind of a little bit of rotation there.
All right, that's stocks. What about the bond market?
Yeah, let's check that out too, because we did get some action in the bond market. The U.S. yield curve is steepening. And when we say the yield curve, you think at the very shortest end, that's what the Federal Reserve is doing. Then you have like the 1 month bills, the 3 month bills, all the way up to 1 year, 3 year, 5 years, 7, 10, all the way up to 30 years. So that's the curve. And what's been happening is the short end of the curve has been dropping over the last week, and the long end of the curve has been going up. And so that creates more distance between the short and the long end, and that's why we call it a steepening. So here's a 13-week T-bill. It was down 2 basis points today. I'm going to show you the 10-day trend because it was just 3.75% last week, and it's dropped 14 basis points since then, and that's a pretty sizable drop. And what that is traders in the bond market pricing in those Fed rate cuts, at least one cut, and probably maximum one cut next week. So that's kind of getting in stone right now. If that doesn't happen, you're going to see a lot of problems. So I don't think Jerome Powell is going to necessarily deviate from that, but I do think he might say something that kind of indicates what's going to happen next year, and that's going to drive the market. Meanwhile, on the long end of the curve, we can see it's been red, it's been green here, but net over the last 10 days, it is up, and it's up 5 basis points today. So the lower end, the shorter end of the curve going lower, and the longer end of the curve going up. That's a steepener, and that's just something we'll track here into next week and the Fed meeting.
Crypto.
Yeah.
You don't have to ask.
The obligatory crypto check. So let's do that. Let me get my header up here first. There we go. Bitcoin holding 90,000. I guess that's a big headline. We'll check out the technicals in a second. I just want to set up, I got a clip here of the latest Stocks in Translation episode with Zach Guzman of Trustless Media. If you recognize his name, he used to be a Yahoo Finance anchor right here. And he was talking about, and he was answering my question, is this the time to buy the dip in Bitcoin? Let's take a listen.
I think vibes-wise, obviously, there are always tremors. I think this year has been a very long year for crypto. We started the year with the Trump meme coin and all the excitement around, oh, wow, we got a president who understands this stuff, to, hey, wait, does he really understand this stuff, to where we are now. And I think, we're seeing some of the fears trickle in around strategy and what Michael Saylor's been up to in building Bitcoin treasury companies and the copycats and the like. But generally, I think I would be buying this dip, Jared, if I can give you a real succinct answer.
Yeah, so all right, so he's bullish, he would be buying the dip. That's nice to know. Here's a Bitcoin chart over the last day. Let's put the year-to-date back on. I put this on quite a bit just to point out that we're coming tantalizingly close to the 75,000 lows from earlier in the year, which is also the high from the prior year. There you go, right in there. So you draw this line right in here. I think there's going to be a washout, but I could understand if we just rally from here, and that's the end of the whole matter. I too think that the Michael Saylor strategy bit is a little bit overblown right now, but I do see that the sellers are still in control, and my line in the sand is way above the current price, which is 110,000. So until then, I'm not entirely convinced.
Anything else on the Jared Blickery radar?
Yeah, I think we get PCE inflation, kind of a little dated look. I don't know that it's going to be that market moving. Fed meeting next week going to be huge. And then after that, I think we get the next jobs report in the middle of December, which is a little unusual, but given the shutdown, that's the data we have to work with. After that, hopefully we'll be watching paint dry.
There you go. Thank you, Jared. Appreciate it. Stick around. Much more Ask for a Trend still to come. C3 AI was out with earnings a few months after surprised Wall Street with a deep restructuring and a new CEO. That brand new leader, Steve Ahakian, joined opening bid with Brian Sozzi this morning to discuss what he's been able to tackle at C3 AI in his first 2 months, the earnings, and more.
Q2 for us was a solid quarter with better execution. You've seen the momentum with our bookings growing 49%. A big strength of that is the federal business. That grew 89% year over year. A big piece of this is the move from the federal business to buy more COTS solutions and drive adoption of AI, and also the reindustrialization of our military. So, for example, like the Maritime Industrial Base, which is directly benefiting C3. So I say federal's definitely on fire, but we're also closing blue chip companies like a GSK, AMD, and Signature Aviation. So I think it's a testament to the enterprise AI market that's accelerating and the strength of the C3 AI platform.
Steve, what changes have you made to how the business is run?
The biggest focus, and Brian, I've been nonstop meetings with customers, partners, and prospects. The demand for enterprise AI is accelerating. Our focus, mine, is to put an exacting execution plan in place and drive a culture of a high accountability. The market's there. When we demonstrate economic value to our customers, you get a GSK that goes from a single use case, like demand forecasting of vaccines, to an enterprise-wide agreement. So that's the first focus, execution. Number two is the focus of our product and market. When we go after key use cases like industrial asset performance, supply chain optimization, and in our generative AI application across key verticals, we win. So again, doubling down on those areas that we have clear leadership and clear customer success.
When the restructuring news came out, I believe it was August, It surprised the street. And my takeaway at the time, Steve, was it was a sales force issue in terms of, the sales force perhaps just wasn't getting the job done or closing deals. Have you changed how they are compensated?
We more closely align incentives with the outcomes we want, which the number one outcome is driving economic value for our customers. And what does that actually mean? We focus to get into the market with initial production deployments, the IPD motion. This is a single use case where when we actually demonstrate the economic value aligned with the customer, those convert. So the incentive model is clearly aligned to landing these initial use cases and driving the value of our customers. If we do that correctly, growth and a path to profitability will follow.
The government business, like you mentioned, Steve, has really caught a lot of momentum. How big is this business overall for C3 right now, and where are you winning business?
Yeah. So it's a massive business for C3. I kind of mentioned 89% growth year over year. It's about 45% of our bookings. Where we are winning, historically we've been in the Department of War across the Air Force, Navy, Marines, and Army. But you're now seeing the strength of the civilian business. And I think a big part of that are these agencies focusing on becoming more efficient and driving adoption of AI. We highlighted a great customer example with the Department of Health and Human Services. This is a great use case utilizing the full strength of the C3 AI platform from our data integration, data fusion capabilities, and then an ability to drive insights and workflows on top of that with our pre-built applications. So I would say the strength is across civilian and the Department of War, and I think these trends continue.
What contingency plan, Steve, do you put in place? We're just coming off a historic government shutdown. You talked a little bit about in the call. If this business even becomes more important to C3I and we get another government shutdown, what plans are you putting in place today to offset any weakness there?
We can't control the government shutdown. We didn't control the 43-day shutdown in the last quarter. And I would say despite those headwinds, we delivered strong results in that space. So I would say, one, continue to deliver value. If we deliver the value, it doesn't matter if the government shuts down. We'll continue to have these conversations and drive the expansions of that account. But again, beyond just the federal, commercial, we're seeing the same thing. Companies want to go faster adopting enterprise AI. And again, when we demonstrate value, we go from initial use case to enterprise-wide agreements.
What inning is the U.S. government in moving towards AI?
We're in the early innings of adopting AI, and I appreciate this administration's focus on the AI action plan. That is a big push to allow the U.S. to win in this AI race. But now it's up to the individual agencies, and I know it's a top priority for virtually every agency to find use cases and solutions. And a big part of this is actually finding the right partners. AI is very early, but you need the private sector to come in to provide expertise to work hand in hand with the government employees to identify the right use cases and the right deployments. And a big part of this is integrating into the core systems and data of the US government, which is not easy. But again, this is a core capability of C3 AI and something we will double down into.
These agents that the industry is starting to deploy, starting to find their way inside of government, are these going to replace government jobs?
No, not at all. I can tell you, if I put my government hat on running the GSA, there is so much excitement from the actual employees to pull in AI. And why? It's to eliminate the day-to-day drudgery of work, whether it's crafting a RFP or a proposal for a sale of a real estate building at the GSA. The employees are the ones pulling this technology in and asking. And that was a big part of the push to drive the deals with these OpenAI and Anthropic and Grok and Gemini to get them into the government. But that was just the beginning, and that was a taste. Now the desire is to go more end-to-end workflow adoption of AI.
Since we last talked, Steve, there's a report by Reuters, I'm sure you saw it, that C3 is exploring a sale. Can you comment on that? And then secondarily, are you undergoing some form of strategic review where that could be an outcome?
Brian, I don't comment on market rumors. What I can focus on is the execution day to day. And I can tell you the demand for enterprise AI is growing by the day, and the opportunity at C3 AI is bigger than I can anticipate. So the two things I'm focused on is exacting execution across sales, doubling down on delivering economic value, and focusing on the use cases and vertical markets where we see demonstrable leadership and customer success.
On a non-GAAP basis, do you think the company is operating profitable sometime over the next 12 months?
I put a plan in place. I'm not going to comment on timing, but the operating plan and the financial model I put in place with my management team leads us to a path to rapid growth and a path to profitability on a non-GAAP basis.
Taking a look now at some of the stock moves in the after hours. Shares of SoFi Technologies under pressure here as it announces a public offering of its common stock. The company's making an offering of $1.5 billion of shares. SoFi intends to use the net proceeds from the offering for general corporate purposes, such as enhancing capital position and increasing optionality. Goldman Sachs will act as the underwriter in the offering. Shares of Ulta moving higher after hours. The company reporting third quarter earnings that beat analyst estimates. Ulta reporting net sales of $2.9 billion for the quarter. That's an increase of about 13% year over year. The beauty retailer also hiking its sales and earnings outlook for the second straight quarter as consumers keep spending on beauty despite cautious spending on discretionary categories. And HPE shares fallen after hours after missing revenue in the fourth quarter. Company reporting revenue of $9.68 billion. The street was expecting $9.93 billion. It also issued first quarter revenue guidance below estimates as enterprise spending slows amid economic uncertainty. We will speak to HPE Enterprise CEO Antonio Neri tomorrow about these results and more. Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.